1 2 1 2 1 2 1 2 1 2. Okay, guys, something happened here. I'm not sure what. Sorry for that. I suggest my suggestion is let's come together tomorrow, same time, and let's do live trading tomorrow again. So I'm sorry for really bad disturbance here. I don't have any idea what happened. Yeah, that's a nuisance. I don't know what it is. I have to check it right now after the session. My idea is just to give you a guidance and to show you what's possible with TTW-TradeFinder and Bookmap, and then make some trades. By the way, I was long 28, but based on the DID here, and then I was stopped out very fast because it went through, but my focus was all the time for the long position. Let's recap a little bit. It's just theory right now, but anyway, let's recap. We can do following. Have a look here at my chart where my cursor is. You see here the DID, it's finished, and then the market went up, went to the 98, and it was a very nice move up until, and that's always a sign of yes, a warning sign. That's a sign on the wall here. If you are long and you see the volume stop coming up here, let me check that in the SPY as well. That's very perfect. Let me show you what I have here on my chart. On the SPY, you will see the SPY here. Yeah, this one, that one here was the same signal as in the S&P and the E-mini at 10 o'clock or 10 something, I don't know, but that was the right one, and that was a really perfect one just to take the trade and either to exit the trade here, to exit the trade if you are long. So my view was long at that time, and that's a warning. That's the really warning on the sign. But anyway, you know, if you are long, say 67, 68 or whatever, you have really a good yes, you get 67, 68, it was up into 76, 8 points, 7, 6, 7, 8 points here on that, and then tighten your stop, take your profits. Maybe you can let a runner here, but anyway, be sure that this volume stops. We are yes, we are analyzing based on the data here, are really serious. What I'm saying all the time in the room, based on our statistics, this volume stops works 5 or 6 times out of 10. So you have the best. On some days you will have more, but let's be humble here in this case. You will have at least the best chance is 6 to 4 or 5 to 5, and that's really a great probability you will have with the volume stops here. I've read that some guys of you have been long here at 66. That's great. There was nothing I saw here on all my charts, but I was distracted here with my microphone, my technique here. And then it went down into this volume stop, which was, as you can see, a native stop here as well. So they pushed and took all stops here, which simply drove the price down, or pushed the price down here. And now something happens in the market. I simply lost the connection to, let me say, yes, I lost the connection to the market right now because of this. Yeah. Quite interesting. The price dynamics plot is showing a very strong selling here. That means you see this red bubble here. That means a high volume was traded here, executed here right now. There, it comes together with a native stop here. And that was it, what I have to comment. I will send an email to you, to everyone, as well in the Discord room. You will see it on Twitter, on Discord, as well. If you're subscribed to TW-Trader, you will see that on your email, as an email. Please join me tomorrow. I will check all this technical stuff here. Yes, it is, Chris. We are working hard on 3.6, really hard. Just we have rewritten everything on TradeFinder. You will be surprised, and we have added new functions as well, this native stop, which are based on the order IDs, but they are only visible with market-by-order data. So that's something which will be hopefully released very soon. Yeah, sorry for the left channel here. I don't want to touch the system anymore. Just to be with you the next few minutes, and then I have the challenge to check what went wrong here on my side. Again, the native stop here came together with a volume stop, but the market is strong down. Let's have a look at the order book imbalance. The order book imbalances was one of the most important parts a trader should know, because the market is trending there where the liquidity is, or the liquidity is simply an assumption of institutional traders where they expect a price to be or to come, and yes, liquidity guide us through the day, of course, order book liquidity, and you see it dropped constantly, so it's more on the downside, and so the bid, in this case it's on the bid, and if the liquidity is on the bid, then the market is more likely to trade lower than higher. Okay, something is happening here. My chart is lagging a little bit here. I have a lot of charts up, Binance, Bookmap data, dxFeed, OmniFeed, Rithmic, and a lot of charts, so that consumes a lot of power of my PC, of my it's a workstation, and that makes it a little bit lazy. The screens are a little bit lazy here. Chris, that's okay. I'm really, it's fun to be with you here and to guide you and to answer your questions, to show you how trading could work as well. It's on one part of how trading works, but I'm really not willing to accept any technical issues here. The technique is there to serve me and myself, and not that I'm here to bug around with the technique here. Okay. Chris, I don't know. No, I don't believe so that you can do that on your own. By the way, there are a lot of there's some, how to say, instructions how to calculate gamma. You could do gamma for yourself. That would be, or for you, of course, that will work. But institutional levels, I even don't know myself how they are calculated. So I just post them. I don't comment. I don't market them. I'm not allowed to sell them, just to share it. I'm sharing these levels with you, with those of you who are interested in those levels. You see, what you can really nicely see right now here is that I will switch back here. That the market is fighting with this 34, 39, 40 level, which is an institution level. I'm not sure if this is a gamma level as well. I don't know. Let me add a price alert here. Or was it 43, 44? I'm not sure. Yes, it's 44, so it's more precise. It's fighting with this 44 level here. And let's have a look whether we have some in the distance, some liquidity there. However, you see as well a very nice divergence at that point, by the way. It's really easy to spot. That was the stop run here. And you see how the buyers are coming back here and trying to hold the price. Hold the price above 44, 45. Currently, I don't know what's important at those levels here. I'm getting them from my associates who are working for a big institution, financial institution. It's only a part I'm getting just for myself, so it's nothing I can expose, or I can't expose because I don't even know what is. But one part is for sure the gamma levels. And by the way, the gamma levels are nothing secret. You can do that by yourself. If you are on Twitter, follow Mr. Pafiliev, I think, yes, Mr. Pafiliev, who disclosed how to calculate gamma levels. Yeah, no problem. So the prices, as you can see, it's very easy to say at the moment the price, they want to keep the price down here. You see it based on the liquidity here. It can go through, of course. It can go and take all the liquidity out. If the buyers are back and they consume all the liquidity here, the price can likely, excuse me, very easy go through that. But on the other side, they are trying to keep the price down. Not sure what's really going on, because we don't see any huge hints of liquidity up there and down there. So I'm simply watching right now. I have to watch around and see if I have some other signs on the SPY, on the volatility indices as well. They are up, and that means the market was down or is coming down. Now they're trading back. So there's, for myself, there's nothing to do here. Don't touch this market, because at the moment, first of all, I lost my focus and concentration on this market. And second, I'm just don't have any reason to do anything here. I don't know what should I do, buy or sell. And that's the hardest part. So if you, yes, my philosophy is simply wait, try to be patient. Don't chase every move. Don't chase every move. There's no need to chase any move here. wait until the market gives you the opportunity to trade. We have had the 68 long, that was a very nice one, and then the warning sign came up with the volume stop, and then the market broke down very nicely here into the 44 area, which is institutional levels here at 44 exactly. Doesn't mean that the market is not able to trade below 44. No, it's not. Can happen, of course. It depends on if they pulled a bit. The market is, as you can remember, when was it, 2 or 3 days ago, when the market broke down for 230 points. Kevin, we will see that in the next version, yes. And that's quite interesting to watch. We have a move on Thursday. We will see it tomorrow. We have a move on Thursday, and then when the move is over, the market is simply trading around for, I don't know, maybe I guess 2 hours or whatever. And then suddenly, out of nowhere, it comes back and trades really hard and gives us some nice opportunities to trade. But at the moment, you see that really nicely here on the price move. So they touched 44 at, what was it, 10.33, and now they are trading up, let me show, 33, 6-7 minutes here, one few points up. That means 5-6 points up. That's really nothing. You see this, the angle here is very low here. It's flat. I don't know if I can draw this line. If this is the price, that's not the best. You know, if this is the line and this is the time, you can draw a line here and you see how flat this angle is here. Really, this is really no interest in trading. This is maybe a retailer around and trade back and forth, but there are no institutional big traders here in the market. You see that as well. Market volume is quite low, 900. We have an average liquidity which is not the best, by the way, 80, 90. That's really nothing exciting here. So the market is simply trading sideways with no pressure, with no excitement, nothing. So if you have questions, I think this is a good time if you have some questions regarding Bookmap, regarding TradeFinder, trading. Whatever. common questions about trading? Let's take a few minutes we are together here. So I will stop in 15 minutes, 10 to 15 minutes. And then again, ladies and gentlemen, join us tomorrow, 9:30 Eastern Time, when the market opens, for another live session, because today it was a disaster. I mean, it was a disaster based on the technical side here on my side, not on your side and not in the trading. We have had a very nice opportunity at 68, as I'm repeat myself here, and a very nice sell opportunity as well. I didn't take because of this technical stuff here, but anyway, let's come together tomorrow. Prepare your coffee, your drink, and then sit down, relax, and we will have some fun here in the next tomorrow and in one and a half hour, and do live trading if you have questions. Could you briefly explain, Jana, could you briefly explain the difference between the existing MV stop and the new native? Yes, the existing market volume stop is based on volume. And the native stop, the native volume stop, we will call it the native volume stop, is based on order IDs. That's totally different. So when you know the volume stop is always an important indication that the market is exhausted. Now the chances, of course, if you run into a market volume stop or if you see a volume stop, then the chance is always there that there are still buyers or sellers to push the price up or down. Therefore, I'm saying the market volume stops on my side, as I did simple, you can do that really easily, open an Excel file and count the not working volume stops, is 6 to 4. That means if you take every single market volume stop, you will have the chance to get to be better than 50%, 50% probability, of course. And the native is based, I don't see any native here at the moment. I will show you that, or you will see that. You will see native stop, which is colored in blue. It's a sweep, which is colored blue. Then that's a native stop, and that's based on order IDs. Yes, it's you know, the Market Volume Pro was developed simply because of our first idea was to have an indication for the aggressors here. Therefore, let me show you that. The aim and the idea of the market volume stop when we started to analyze markets was simply to measure the aggressor volume. So I'm a totally friend of an depth of market display here. I have the volume profile here on my chart on the right side here. Then the dome based on bids and asks, and the aggressor or market volume is in between. And the first idea when we started to analyze markets was to see what is happening here in between the liquidity, the resting liquidity on bid and the resting liquidity on ask. And that was the introduction of the V delta. And by the way, which is quite important and quite interesting to watch, is the volume between which hits the bid and which lifts the ask. So you have red and green. And that means red is hitting the bid and green is hitting the ask. And every time, you know, markets tend to seek equilibrium. That means they want to be always in the middle. If there's a deviation between bid or ask, then the market tends to equalize the levels here, the price. You will always see an exaggeration of prices, and on one side, on bid, on ask, and the other side is not following. That can happen for some time, but you will see that. You will really see that, like here. You see their sellers are hitting the bid here, and there are no buyers on ask. That's quite interesting because it gives you really an idea when the difference between green and red here in my chart, when the difference between green and red is huge, big, yes, not huge, but it's there. Be sure that this is going to be flattened, to come into its equilibrium. Always, the market always seeks the middle way here. And then if one side is heading up, then it seeks again to come together, seeks the equilibrium, to be in the middle of the price, and so on and so on. That's really extremely helpful to understand some price actions. You see it very clearly how the selling is progressing here, until it comes together with until the buyers lift the ask here, and then the price retraces a bit. It doesn't mean that the price is going to pull back here very, very hard, but it comes to a rest, it comes to a break, takes a pause here, you know, and then again, selling. You see the difference between red and green, and then it needs a break. That's why I value the Market Volume Pro, because it is displaying the aggressive volume very impressively, and that's nothing which is aggregated, or look here, that's a very nice example. It comes together then with a volume stop. The volume, big volume, was traded here, broke to the, oh, look here, that's quite interesting. This was Jana, I think it was Jana asking. Jana asked that, yes, native stop. You see here, that's really nice native stop here, colored in blue. And that's based on order ID, sorry. It's not a mistake. It's not a mistake if you buy Market Volume Pro. It will give you, look, when you're on the Bookmap Marketplace, please have a look at the attached videos I did and the descriptions I did on Market Volume Pro. Yeah. Just to demonstrate, let me demonstrate something. It's not the best idea I'm doing. I just don't want to lose. I'm long 36.50. The point why I'm long 36.50, it's quite too late here. I'm just too late in the market. I will get stopped out here immediately. I'm already stopped out here. The point is break even, just to demonstrate that. The market was exhausted here at that point, and the market went a little bit further down. That's always the case because retailers think the market is going down. That might be right, so I'm not sure on this point, but you will see the square coming in here, and what happens, the market, yes, bounces a little bit off this part of 38, maybe for 3-4 points, depends on the liquidity, and then goes up and then retraces. There are several techniques we should discuss maybe in the next webinars, how to put that. But be sure, because you know the market is very strong down, and on some days you will see this behavior. You have a volume stop, you have order native stops here hitting the market, and the market gets exhausted here, and it turns back. So if you take this move up, in this case, it just for demonstration purposes, I was out break even. It might go 4, 5, 6, 7, 8 points up, because the exhaustion is on that point. That was here and at that time. And now some poor retailers think the market is going further down, and they might be caught in this move, and then the market simply pulls back and trades into 45, into the POC 50, and so on, into VWAP 57. That can happen, and that most of the time will happen. Quankolo, so your question is on the DIDs. Yes, DIDs are a little bit more cautious. We did a back and forward testing, and the DIDs probability is about 30%. And you must always put the DIDs. It's an iceberg development in the context of the market. It's not possible to trade simply blindly icebergs or whatever. I mean, you can do that. That's up to you. There are no restrictions on that. And but be very cautious with icebergs, because there's always an confluence. There's always an interaction between sweeps, which are order ID sweeps, based sweeps, and icebergs. So on some days we see institutional traders coming into the market, selling 1,000, 2,000 contracts and 6,000, 10,000 contracts. And then what happens? The market is going up, and then at the end of the day, the price comes back. And then you will see a lot of DIDs and icebergs trading, covering this thousands of icebergs. You must understand this icebergs in context with the sweeps and what the market is doing. An iceberg, simply alone an iceberg in the market, it's not sufficient to make any decision. I mean, it's good, it can work, of course, but what I prefer for my trading, for myself, what I'm trying to tell is look for a probability which is at least 50%. If you get 1% more, if you get 55% to 45% as probability, it's great. Chris, I missed that, but when it disappears, then it means either the size. I have my iceberg set to 300. I'm interested only in icebergs which are which has more than 300 contracts traded or transacted. And if it's below that, then it's cancelled. It's simply not on chart, because I will scatter my chart with thousands of sweeps and icebergs in order to prevent all this I'm saying very consciously useless information to see 5 icebergs here, 10 icebergs there, 15 icebergs here, 50 icebergs there. We have developed the dynamic hidden order plot. You see this band here below where my cursor is. These are all traded icebergs. You can't believe it. These are all traded icebergs. There's no one missing. And on the other side, we have added this iceberg dome here to give you a visual guidance about the icebergs. Just to give you not to distract you with 5 icebergs and this little numbers, you know, that no icebergs, as I talked with my friends Moby and David, icebergs are nothing new, and icebergs are nothing really special. There have been since decades here in the markets. The question is, how do we interpret icebergs? And in this case, Chris, I think I didn't saw that. It was maybe too fast. But since I have defined 300 as a volume number, I think it disappeared because they didn't match this 300. Yeah, if you said if you can test that with 50, for example. You can test that with a lower number. That's not, yes, absolutely possible. But then, you know, my idea is simply, I just want to sit back here as I'm saying, or we say as a trading to win team here, relax and trade. And if I see a lot of icebergs here, a lot of speed, because they are so small, you won't see the bubbles, you won't see where the price is going to. You maybe will miss some other information here in the market. And therefore, my idea or what I trade is, I just want to see the big ones, the big moves. That's why I'm looking for big events on the market, like this one that was sell spike. That was a very nice try to go long here, maybe be lucky that the price is trading into 45. Who knows? On some days it's working, because, and that's what we should discuss every day, if you see this volume stops, they are excellent. They're really excellent. Look here, another simple, very nice example. Was this one. Okay, very nice to see if you add the market volume stop here. This is one, that's a real one. But you can take the trade right off here, 75, and your stop must be at least 5 points. And that's, for myself, it's a little bit too much. What I'm doing is, either I'm watching the next 2 minutes and see what happens, and most of the time the market will trade a little bit more up, simply because if you watch your candle, see your candle chart at 10 o'clock. What happens? You think the market is going further up, you are trapped, and that's this few points up here into 77, 78, 79 are simply trapped retailers. You can do following. If you see this square here, just draw, I hope you can see this tiny line here, just draw a line around the 77 here, and if the market drops back, you can take the short here, you can sell it, because it can go a little bit more up or beyond the volume spike, as we had hey, where is it? Okay. I need to recenter, as it was here as well. You see the same behavior, the same pattern. It goes a little bit beyond this 38 here, and then it snaps back, comes back, because there are no more sellers, they are trapped, the stops are hit, and then it pushed the price up. The pink markers are the liquidity. You know, the TradeFinder comes with liquidity tracker, and the liquidity tracker is doing following, is measuring market volume and average liquidity, and it measures the absolute volume here. You see, when something happened in the book here, when they add, I have set my trigger liquidity to 500, and if the market, if in the order book here someone adds 400, 500, and the number jumped above 500 here on the resting side, I'm getting in this case a square on sign, this pink square here, which signalizes to me, okay, that was a resistance level in the book, because it goes so fast, and most of you, 99%, I would even say 99.9% of all traders don't have a dome in this case, or they have a dome, of course, or maybe in NinjaTrade or Sierra Chart or Thinkorswim or whatever. But they're missing this very nice information here. You see the price bounced off, traded down, and now it's trading again up. And this relative and absolute liquidity is really worth the money, because when you understand the dependence between resting liquidity and market volume, when you understand how the price is determined, how the price is set, then you will value this additional information on chart. Excellent, Christian. Okay, guys, I apologize. I really apologize for this distortion here on this channel and on this live trading, because of the microphones and the technique is not working. I will add another live trading session tomorrow. So I will send an email to every one of you who is subscribed to TTW Trader. So please subscribe to our newsletter. We do not spam. We do not spam, ladies and gentlemen, anyone. We just send information out because of new release changes and upcoming events. Nothing else. So please subscribe to TTW-Trader.com, and I will put the invitation as well in the Discord room and on Twitter. So join us and my team, the Phil and Bernie. Thank you, Bernie. Thank you, Phil, by the way, for your assistance here. Join us tomorrow for another hour of trading, and maybe we will get very nice trades tomorrow as well. Thank you very much, guys. Thank you. I apologize, and join us tomorrow as well. Let's have fun, and take care. Enjoy your life. It matters most than anything else you have here in trading. Thank you, and see you tomorrow. Bye-bye.